your source for the latest local and national news that can impact you if you are in the market for real estate. Here are your hosts, the Kingwood mortgage guy, Mike Durr, who uses his 25 years as a mortgage professional to help people improve their credit, and Joe Solis, an accomplished home inspector, real estate agent, and trainer of new agents for Jane Bird Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Joe, good to see you, my brother.
Let's do it, man. Good to see you.
Yeah,
How are you?
Let's talk about a little credit stuff today.
Ready?
Better credit, better home. That's what our story is. So, anyway, well, tell me about your last week. What was good about last week?
What's
Nothing?
good? No. Well, we finally so I've been helping this younger couple get it's their first home, and they decided to build it from the ground up with a builder that's interloop type of builder.
Gotcha.
So it's been a challenge because there's been several holdups, but last week, this whole last week, it's been good because we've been kind of catching up to speed with where they were supposed to be versus where they were. Other than that, son's back in band, so I've been doing daddy taxi for only about another week. My man, he's got his driver's license, so just waiting on. We had to get a VOE from his school, and then take him to the DPS office sometime later this week to get him all certified.
Nice, certified. All right, that's good. So for me, I got through the 45th anniversary of my marriage with my wife.
Congrats.
Still married.
That's it, man. It ain't easy.
Hey, there's pressure when those things happen. I mean, you got to do something that's good. And so anyway, survived that. And then last night watched an amazing Astros game. I know you're not much of an Astros fan.
I didn't see it.
But they're behind the Texas Rangers by 3 games last night in the playoff or in the standings. And it's towards the back end of the year, and they ended up winning 10-9.
Oh, wow.
Coming back from behind 2 times, they were ahead, then they got behind, and then they tied it, and then they got behind again. And anyway, it was a really fun game. So
those make for some fun games.
Yeah, that's for sure. All right, so we're going to talk about credit today. This is kind of our root is better credit, better home. I always wanted to, there are a lot of people that struggle, and it was confirmed to me today that there's really 2 major issues that keep people from buying homes, and they are, can you see that?
Yeah, money and credit. That's like we talked about.
We're going to figure it out here. That's what I'm talking about.
Yeah, I see it.
It's money and credit, or money or credit, but it always revolves around one of these 2 things, maybe both of them. So that is what we're going to talk about today, particularly credit. And I've got a list of 10 myths of credit. Do you know what any of the myths are about credit?
Man, I'd probably say something and I'm off base. So let's see what you got.
Let's see what we talk about. Well, here's what we're going to cover. The 10 myths about credit scoring. Frequently asked questions about credit repair. Keeping bad credit is more expensive than repairing it. Now think about that. Keeping bad credit is more expensive than repairing it. That's interesting. And then we're going to talk about some loan programs and how much down payment. That all this relates to credit in this particular case. And I spent a lot of time in the early part of my career working with people and helping them fix their credit. I don't do credit restoration. Never did that. Never really had any inclination to do that. It's hard, I'll be honest with you. But there are guys out there that you can trust. There's a lot of guys that you can't trust. And that's why I always say, go to somebody like myself first, because I can a lot of times I can help you just by doing some simple things, and usually it relates to paying off some debt, or that's probably one of the main things. But the guys that do the credit restoration, they go in and they dig in, and the good ones usually have some attorney that's in play. So anyway, without any ado, we will get started. Credit myths. So here's I'm going to give you the first 10, and we're going to go through this one by one. When I pay off a past due account, such as a charge-off or a collection account, it will show paid and no longer be negative. That's a myth.
Yeah.
That is, here's the right answer to that. It is difficult to fully restore your credit without paying your outstanding debts. However, paying off a debt can actually hurt your credit. Have you ever heard that? Where when you pay something off, like this is what happens. A lot of people realize that they've got bad credit. They get a solid job, they start gaining money, and they don't have any credit because nobody's offered them any credit. So they start figuring out, well, it makes sense for me to get my credit back. Instead, I'll go and pay off the stuff that used to be that I left people holding the bag on. Well, in many cases, that turns out to be the worst possible thing they could do. And so, does this make sense? I mean, do you have any idea?
I'm following. I'm on the
Okay.
edge of my seat. I want to hear why.
Well, so here's the deal. On the credit report, the creditor, there's a timeline on credit. So when you have a bad credit, the longer it stays on your credit report, the less effect it has on your credit score. But it has a designation on the form of date of last activity. Okay. And so this date of last activity, if you call up the creditor and ask them, do I still owe that money? Because you hadn't heard from them in 2 years. The date of last activity just got updated to today. Yeah. Now that dissipation that you've had has come full stroke all the way back, and now your credit is blasted again, just like it was when you initially went laid it with the guys. So you got to be very careful, and particularly with anything that's over 2 years old. I tell people most of the time, I say, look, don't do anything if it's over 2 years old. Just leave it alone. I understand that you want to make it right. You can do that after you get your loan. But right now, you don't want to do that because it'll cause your scores to go down. So that's one of those myths. And there's a longer answer in here, but that's the one I think is important. Number 2 is, if a negative item is successfully deleted from my credit report, it will just come right back on my report. Have you heard that one?
So you're talking about something that you paid off in the negotiation, and the payoff was to remove it from the credit report, right?
Yeah, it could be like that. If in fact you pay one off, like what I tell people to do when they are getting ready to pay off a credit report, that what you have to do is you first call them and you say, look, I know I owe this stuff. I'm willing to pay, but I don't have enough money to pay all my creditors. And I'm looking for people that will work with me to help me resolve or settle some of these accounts. Is your company one of those that would work with me? And so most of them will say, yeah, sure, we'll work with you. And then you negotiate how much you're going to get as a discount on the actual settlement. The key part of it is that you say, okay, for you to do that, I need a letter from you confirming that I'm going to pay you X number of dollars for payment in full. Gosh, without that letter, I can't pay it. Because if you don't get a letter like that, 2 things: they take your money and they don't do anything to your credit report.
Yeah.
They don't report that you even paid them anything, and it just stays on there. But if you get something in writing, then you can go to the credit bureau and get it removed for sure. So that's a big point, that you have to just make sure, if you've got a collection or any kind of late payment or anything like that, get anything that you've got from them in writing. That'll help a lot of people, especially if they've got a lot of stuff to clear up. Okay, number 3. There are items such as bankruptcies, foreclosures, and tax liens that are impossible to remove on a credit report. True or false?
I want to say false. This is the way we're going. So I mean, it sounds like a myth to me. But
That's a myth. That's right. There is nothing that's been put on anybody's credit that hadn't been removed thousands of times. And the creditor is the person that actually removes that information. There's not a government entity or anything like that. It's a creditor removes that. And these creditors are stores, they're merchants, they're services. They do all these kind of things. And in some cases, when you appease them with however you do that, they will remove that stuff. Now, they don't like it. They don't want to do it. And matter of fact, to some standard, particularly the credit bureau doesn't really care one way or the other. So they just don't want to bother you. All right, number 4, disputing a credit report is easy. Any consumer can do it themselves. And is that true or false?
Well, I don't know. I think that's true.
Yeah, it is.
Yeah, because I've done it before. It's not too hard. The thing to remember is that you have to do it at each entity.
Each bureau. So disputing a credit report is easy. Getting results from the credit bureaus as a layperson is amazingly difficult, complex, and infuriating. And the problem is that the credit bureaus blow you off. They don't want to mess with you. They don't have a lot of staff. They make their money doing the reporting part, and the resolve problems is one of their lower priorities. The Federal Trade Commission receives more complaints against credit bureaus than any other type of business. In February 2000, the 3 major credit bureaus paid a fine of $2.5 million for ignoring consumers requesting information regarding their file. Remember, the credit bureaus are primarily interested in protecting their profits. Investigating consumer disputes consumes these profits. And it goes on and on and on. So restoring your own credit is like repairing your own transmission or representing yourself in court. It is possible, but you have to be willing to invest the time and learn the processes, assume the risk of inexperience, and realize it'll probably take you longer than you would and be less effective than if you used a professional. So just FYI. And when I see a credit report, I used to throw this number out, about 1 in 20 actually needs credit restoration. And in most cases, it's really just resolving balances on credit cards and paying down stuff and making sure you communicate with the people that you're working with. So those are all helpful things. Okay, let's move to number 5. The credit bureau allows me to submit my 100-word explanation. Creditors will read my statement and take it into consideration.
You tell me. Because I've seen those statements before.
Well, you can do that, but it's probably the worst thing you could ever do, because they will take everything on there and turn it against you.
Yeah.
So, 1, don't do it. If you've done it, that would be the first thing you want to get removed from a credit report or somebody that's looking at your credit. Number 6, the credit bureaus are a branch of the government, infallible and above reproach.
I don't think you put government, infallible, and above reproach. Well, maybe above reproach.
Yeah, those words don't even match. Oxymorons is what you call those. The credit bureaus are publicly traded companies in business to impress stockholders. Speaking of that, one of the ways that they make money is they sell, when your credit report is pulled, particularly from mortgage companies, they are sold to mortgage lenders. And it's gotten to the point, because the nature of what's happened over the last year with business being really bad, and anybody when you get your credit pulled, it designates who pulled it. Was it a mortgage company? Was it an auto company? That kind of thing. Yeah. But if you get your credit pulled from a mortgage company, there are chances that you will get 100+ calls that day. I'm not talking about over the course of a month. I'm talking about that day from people, hungry, slimy mortgage guys that they buy trigger leads. And I had a guy, and there's a trick that I won't share online on how you keep that from happening. But I made a mistake, and I did not do my trick to alleviate him from that. And he called me. He said, "Mike, what'd you do to me, man?" He says, I've just received 50 calls in the last half hour. And it's a bad thing. So there's a lot of mortgage guys don't know those tricks, but you know it now. If you're watching this, tell your mortgage guy that if you got a trick, do it now, because I don't want to be taking all those 50 calls.
Or better yet, call Mike.
Just call me. That's right. That's right. I know the trick. You just got to remind me not to forget it that time. I did. I felt really bad for the guy. All right. Number 7, I can create a totally new credit file by getting a new federal tax ID number or changing a few numbers on my Social Security number. That sounds like a heck of a good idea, doesn't it?
Yeah, I don't think it works like that, Mike.
I think that might be close to, let's see, this fraudulent scheme.
Yes, sounds like it.
And illegal. Lying on a credit application is a criminal offense, and with the linking of computer systems, it's virtually impossible to get away with it. It is in your best interest to hire adequate representation and face the music by confronting the credit bureaus armed with the rights Congress has granted you. So, yeah, it does seem like that would be easy enough to do, but boy, I tell you, that you're going down the wrong road on that one. All right, here's one that's kind of interesting. If I build enough good credit, it will offset my bad credit and make me credit worthy. What do you think?
Never heard of it that way.
Well, it's a bad idea.
Yeah.
If you have, like, in this scenario is so odd that I don't even think it's worth giving a lot of weight to. But if you have good credit, why do you have the bad credit? I mean, it's okay. I understand people make mistakes, they forget, or maybe they lose their job, or they lose their income, or something happens to them. But what happens is you usually get there's some kind of a what's the term I'm looking for? Some kind of event that caused
hiccup.
Yeah, and it could be a divorce, it could be a lawsuit, it could be a job loss, all of those things. Sick, you get ill, and you're not earning income, and all of a sudden you got to make decisions on who you're going to pay. Are you going to pay for your roof? Are you going to pay for your food? You're going to pay for Joe's credit card, or on the vehicle, or all those come into play.
You can pay for my credit card if you want to.
Well, yeah, please. But the way this is described, it's like you have the opportunity to start having good credit. What happens really is when somebody has bad credit, they push credit away. They say, "Look, I'm done with credit. I didn't do very good at it. I'll just pay cash from now on." And what ends up happening is all that ends up being on their credit report is the bad stuff that's just aged. There's been no activity, and there's been nothing that would make that get better. So here's a little bit of a trick. Let's say that you've gone through that phase, the event is over, you're back on your feet, you're not married anymore, but you've got more money now than you probably ever would have had, unless you're paying child support or something. Anyway, but you get yourself a credit card and have some kind of activity on this credit card, even though you've got the bad stuff. And what happens is the bad stuff will fade away as long as you don't call them or bug them or get any activity on them, and do the new stuff like you're supposed to, and the way you handle credit cards. Now, they say, "Well, I can't get a credit card. My credit's too bad." And you've probably heard this one. You get a secure card.
Yeah, secure card.
And a secure card is simply a tool that you can get in credit unions, some banks, where you go in and you put down X number of dollars, could be $200, $500, something like that, and they give you a credit card against your own money. And then the only thing you've got to make sure is that credit card reports to the bureaus. And if it reports to the bureaus and you pay it the way I instruct people to pay it, which I'd say you use that card one time a month, you spend no more than $50. As soon as you get the bill, you pay it. You do that every month. Then you go fill your car up with gas again, and you pay it. Just like that. And that will build your credit faster than just about anything. I tell a lot of people that don't have credit, they're maybe 18 to 25 or something like that. They just never had any credit. And it will build your credit quickly. and it repairs stuff too. All right, number 9, nonprofit organizations like Consumer Credit Counseling Service. Consumer Credit Counseling Service (CCCS) can help me restore my credit. True or false?
Never heard of it, so I don't know how to answer. It sounds kind of cool that it is.
Well, it is a valid service, but it doesn't help you with your credit at all. It does help you beat down some of the debt. And what they do is like if somebody's racked with debt, then they'll help them figure out a plan to get out of that debt. But they don't touch your credit. And but they do report on the bureaus. And when a creditor sees that you're in CCCS, it's usually perceived as a negative. Like, why would you lend to somebody that's struggled and gone to this level to get it fixed? So not a good thing. All right, number 10, and the last one we're going to go over right now. It is illegal for creditors to take a negative, accurate listing off my credit report. The law requires that these items will remain on my credit report for at least 7 years. I think we answered that earlier.
Yeah, I don't think that's right.
That is what creditors will tell you, and sometimes the credit bureaus will tell you that too, that aren't very skilled or haven't been there very long, but they can take that stuff off whenever they want to. Now, getting some of them to do it, it's really hard. And I used to do this for people to help them consolidate some debt, and would negotiate with them because I knew they weren't ever going to do it. They weren't going to call, and you just kind of play hardball. And when it's not your money, it's easy to play hardball. But anyway, so those are the top 10. I did have a few others, and you just tell me if any of these if you have any questions, because these are frequently asked questions. How about, let's see. Is repairing my credit legal? It is.
Yeah.
You're right. Can I restore my own credit? I'm going to tell you that's a bad idea. How long does it take to restore your credit?
A couple months, I would imagine, right?
Yeah, I'm going to say, depending on the scope of what all you're dealing with, but I'd say 3 to 6 months is generally what it takes. And it's mainly the problem with that is getting the credit people to respond to you, because you've got to kind of beat them up. How long do credit bureaus take to respond to a dispute? Well, they are required to do it within 30 days or to investigate it within 30 days. Can a deleted item reappear in my report? Oh, yeah, that does happen. Will paying off a negative rated obligation repair my credit? No. You do want to pay them, but it's still going to show as a negative that was paid. And again, you have the life cycle of the credit entity or the derogatory lasts for about 2 years, and it's worse the first 60 days, and then maybe after about 120 days it starts dissipating a little bit. 6 months there's a drop off, at a year there's a drop off, and at 2 years it doesn't affect your credit at all. Okay, does the law require an accurate item stay on a credit report for 7 years? It does not. And are credit reports verified or validated? So this is a question when you are paying a creditor off, and the creditor can go back with your permission and go to call. They usually put you on a conference call and ask the creditor at that point whether it's been taken care of or not. And that's one of the ways that can be verified and removed from your credit at that time. So that's it. That's what most of the stuff that we're going to cover about credit. But I've got this one, credit tips before you purchase. Well, first get your credit in line. Make sure you check your credit with someone who knows how credit works. I mean, this is something that if you go in and, well, this is what I see happen most of the time. There are a lot of young people that are in this as loan officers, and they don't know that you can fix stuff. And so if you have, let's say you have a 579 FICO score, and they go, sorry, dude, got to have 580, and you're done. Well, what they don't know is they can probably get that up to 600 pretty easy.
Yeah.
Ask what scores get the best rates, and are you close? Like an example, if you get let's just say a 699, and what happens is 700 is one of those demarcation lines that's meaningful, particularly on conventional loans. That one point between 699 and 700 can make about a quarter's worth of difference in the rate that you get. And the tiers seem to be about every 20 points, 699, 719, 739. Those are all demarcation lines where the cost to the credit becomes less as you get higher scores and more as you have lower scores. So you got to know somebody that knows that. Determine if you can pay down a debt to raise your score. That's one of the things that's kind of in line with that. Also, I just put on there the scale. This is how it's kind of interesting to me, but 35% of how your credit score is figured out represents your payment history.
Yeah.
Now, to me, that seems kind of low. Like if I don't pay, it seems like that'd be like 70% of my credit score. But they give you 30%. This is kind of this amount of debt is the 30% here. You can't, that's not a very good slide, but the second tier or this 30%, and it's really not the amount of debt, it's the amount of debt on your revolving credit compared to your limit.
Your limit, yeah.
And that has a substantial weight. And it's the good news is it gives us the opportunity to manipulate it a little bit. The others are 15%, the length of credit history, 10% new credit, 10% credit mix. All those are more modern or modest. This 30% one though, if you don't have credit cards, you don't get those points. And I think I think I saw it somewhere that there might be about 170 points there. So if you've got a person that has installment debt, but they have no credit debt, their credit, it's hard for their credit score to go very high just because they don't have any credit cards.
Yeah.
So little did you know that. Do credit scores affect your down payment? Well, you might not need as much as you think, but grant programs are credit sensitive. Lender contributions will be affected by credit scores. And then non-QM programs, which a lot of people think non-QM is like a subprime mortgage. It's really not. Most of the non-QM programs require that you have at least a 680 FICO score. Have you done any non-QMs?
No.
They're not bad. I mean, the last one I did was with a barber's.
There you go.
All right, best loan programs for you if you have lower credit scores. Well, FHA is one of the better ones. USDA, you can't have it too low. VA is a very good loan with lower credit scores, and then conventional to lesser degree. So you can still do okay with some of the lower credit scores. Researching and choosing the right neighborhood. So my point for putting this slide up here was, let me go back. Even if you have lower credit scores, doesn't mean that you're not going to do these things. And this is the kind of stuff that, I mean, what happens is when somebody has a tough row or a chapter of bad credit, they're kind of beat up a little bit. And by getting a house, this is an opportunity for them to get back on their feet, to get back and be in the place where a lot of people want to be, where they're actually gaining money, their home's appreciating. But none of that happens unless Joe Salas does his work and pays attention to these kind of things.
I'm ready. Just give me a call.
Yeah. So, I mean, location is obviously something you've heard anytime somebody says, what's the most important 3 things in real estate? Well, it's always about the location. We talk about amenities, schools, commute, where you commute and stuff like that. That's the kind of thing that you need to talk to whoever represents you, preferably Joe, so that you can make this a good buy. You can't afford to make another big mistake like this. Must have an inspection. Got to have the inspection. No money pit for me, dude. You got to have an inspection. And that covers foundation, the electrical, the plumbing, the HVAC, the roof. What else, Joe?
Appliances, Structural systems, including walls, windows, doors, floors, ceilings, plumbing and electrical fixtures and systems, including the water heater, appliances, not the refrigerator, washer, and dryer, but we do inspect the disposer, the dishwasher, the garage door opener, mechanical exhaust and vents, the range and oven. It's a pretty comprehensive inspection. Definitely worth its time and money that you would pay to have the inspection done, because the whole purpose of the inspection and the whole purpose of even a competent and qualified realtor is to provide you with the information that you need in order to make an informed decision on the purchase of a home.
So one of the things that I talk about is that there are different levels of realtors, there's different levels of mortgage guys, and there's different levels of inspectors. And so one of the things that you want to look for is you want to look for somebody that knows what they're talking about, has experience, is a good communicator, because if you don't get that, sometimes you don't get all the information you need, and you can make a mistake. And boy, I tell you, this stuff keeps you. This is the ticket to keep you from making a bad purchase. Now, the combination of Joe being not only an inspector but a realtor, that gives you two folds that he's going to keep you from making a bad buying mistake in a home that's never going to appreciate, and one that's functionally livable. So that's why you want to call Joe Solis. Right there, his phone number, 346-224-4224.
I love it, Mike. Thanks.
All right, negotiating the best price and terms for your first home, even if you have tough credit. Again, it's kind of the same as the other one. You want to research the market, understand trends, comparable sales, demand. These are things you don't have access to. You've got to have a realtor help you with this stuff, okay? And somebody that's got experience that knows what that all means. Essential tips for first-time homebuyers closing process. This is consistent with what we talked about in the past. It's a great time, but I had a closing this last week, and one of the things that I made a point to do was send my borrower a list of all the things that he had to keep his eye on. And I actually added the one that you said, is that the house has changed. You've got to. They don't have the altimeters,
the check engine light,
engine lights on there. You've got to keep up with that kind of stuff. But it was a good list. I'll use that again and again and again, and I think it's really good. And for somebody that's buying a house, they need this information because they don't know, particularly first-time home buyers. And you know what? We are first-time home buyer centric. We want to help you guys. On that note, we've got a program that is, I think, one of the better first-time homebuyer programs out there. They call it a 1% down program. It's probably not. That's probably not exactly what I would call it. I'd call it a up to $4,000 credit towards your down payment program, and it's based on you have an 80% median income, or 80% of the median income for the counties, and just happen to go through all the counties in and around Houston. And they're all basically the same. If you make less than $72,640, then you'll qualify for this program. And it's kind of cool. Obviously, getting a house a lot less expensive. You can use that money for closing costs. You can use it for down payment. And in some cases, you can even use it for buying down your interest rate. You don't have to be a first-time home buyer, which is crazy. It's a first-time home buyer, but you can do it if it's not. If you make more than this, but you make it in commission or overtime, they don't have to count it. If both the husband and the spouse make money together, you don't have to count both spouses. You can do it on one. So anyway, very flexible in that way. I just went over all this stuff, so I'll pass that. What is needed to pre-qualify? Reasonable credit scores. And 580 for FHA, but if you have 560, I bet I can help you get to 580. If you have 580, I bet I can help you get to 600. And all we're trying to do there is just ensure the fact that when the consumer is being underwritten. The underwriter, we want to make sure the underwriter feels like there's a little room there because they really underwrite the lower scores pretty hard. Proof of consistent stable income for the last 2 years, proof of enough assets to cover the down payment and closing costs. That will help you out. In the qualifying income, we talk about verifiable income. It's either W-2s or 1099s, or tax returns, or bank statements for that matter. 2-year job history, no big gaps. And when I say gaps, I mean over 6 months. New jobs are okay. Even if you started 30 days, or even if you haven't started, but you've got an offer letter, you can get a loan based on your new income and you have a contract. College is considered work history, overtime income considered after 2 years, and you can get it sometimes with exception for 1 year. Commission, same way. So all of this is good stuff. And this is what rates were looking like today. Man, they're tomorrow, the Fed's going to make a decision. We feel pretty sure they're going to raise rates about a quarter, but we do believe that rates are at the end of them being raised. They may raise for this month and the next month, but there's some movement in an opposite direction. I'm just going to say that, and I've said that before. I feel like an idiot because I've been so optimistic that it was going to go down, and it just hadn't gone down. But I'm going to say it again. I believe they're going to come down.
Yeah, let's keep our fingers crossed. I'm ready for them.
That's all I got, bro.
That's it, my man. Well, thanks for having me today.
Oh, well,
I learned some things today.
Well, good. I'm hoping that you and everybody else that was on there got some tips. Listen, if you have any questions, we'd love for you to reach out to us. Our phone numbers has been, I forgot to put on the thing that scrolls all the time. But in this, you can always watch this again. You can call us. We'd love it if you subscribed. Even more, we'd love it if you made some comments and liked it. And we just thank you for being there. And we will see you on the next time. Okay.
See you next week, Mike.
Okay. Bye-bye.
Bye.